Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Tuesday, June the 26th, 2018. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions, take a look at the market, macro, micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses. We do create multiple hypotheses. We do not know what the market's going to do. Therefore, we have a plan in place for whoever takes over control of the market, the buyers or the sellers, and we wait for the market to open up, show its hand, and then execute the plan that best suits the market. This is going to take about 20 to 25 minutes. There's going to be context leading to the hypos. If you're watching the video and you just want to see what the hypotheses are for the day, you can skip ahead to about 15 to 17 minutes in. But I highly suggest that it's better to understand where the hypos are coming from and take in the context prior. So bear with me. We go through a routine. It's the same every day. You can watch these videos on my YouTube channel. There's probably about 4 or 5 years of them, and we do the same thing every single day. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of any future results. Any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Now, silly me, I forgot to take a picture of yesterday's trade levels, but you can go and watch the video. So I just have to do a review based on, these are my levels for today, so disregard those for yesterday. But our main hypothesis yesterday was a open auction out of range, a push up to close the half gap, and then somewhere between the half gap and the range low from Friday, we were looking for sellers to rotate us down back towards the 45 area, chop there, and then fail and come down towards this 22, and then bounce from there. Hypo 3 is what actually played out, which was a open gap, leaving the gap alone, getting a driving force, pushing down through to the 22, and then failing and pushing through to test the month open. The month open is 27.11 and a quarter, and we are looking for them to come down and test that month open and then bounce. We actually blew through that and went as low as 2,700 and a half, and then we bounced off of there. And what did we do? We came right back up into that microcomposite VPOC at the 27.2250. So taking a look at the news for the day, we have Red Book coming up in 5 minutes. 10 minutes, we've got the S&P CS HPI composite. But the big news today is going to be the CB Consumer Confidence and Richmond Manufacturing Index and all its related services. And then we've got Dallas Fed Services at 10:30, Texas Services Sector Outlook at 10:30, 4-week bill auction at 11:30, 1 o'clock we get the 2-year note. And then we've got Fed Speaker Bostic speaking at 1 o'clock as well. And then Kaplan from the Fed is speaking at 1:45. And that's it for the scheduled news. Of course, this move, a major reason for this move has been the trade wars and the move towards the July 6th implementation of those trade policies and the uncertainty whether or not those will go into effect. Each morning I start with a very basic routine. I do this every day. Some people think it's a little bit rudimentary, but believe me, simple is sometimes the best. And what I'm doing is I'm starting with a monthly time period, and I use a 9 EMA, 20 SMA. And what I'm doing is I'm looking at where we are in that periodicity to see where we are in terms of the trend. Do we have a strong trend with good slope, good separation, price paralleling the 9, or are we challenging the trend by challenging the 9 or breaking the 9, or are we getting a possible trend change by breaking the 9 and the 20? On the monthly, okay, not very strong trend. We have challenged the 9 several times the last 4 months, but we don't begin to challenge the trend really again until we get into the 2655 area. So the trend is very much intact, and this pullback and back into balance is really, on the bigger picture, it is, is normal. It's not the sky falling. It's, it was a big move. We had a range yesterday on the full session of 57.5 points, on the RTH session 45 and 3/4. So it seems like it's a major issue, but really it's not that big of a deal on the monthly. Now on the weekly, we are breaking the 9. We're in between the 9 and the 20. The 20 is down at 27.10 1/4. We've got 4 days left in the month. The month open is 27.11 1/4. The bears are going to start getting aggressive and try to to finish this month off in the negative. So watch that 27.11, 27.10 area, and we're likely to come back down and test that 2700, probably dip into the 2600s if we do not hold above the microcomposite VPOC at 27.2250. So we are seeing some weakness in the monthly, but it's still a consolidation in the bigger picture. And you'll see that when I go into the composites and the daily structure. On the daily, we did break below the 9 and the 20. We have a possible FUBAR Mr. Sneaky setting up with a technical gap, and that technical gap would take us back up into the 27.50. The key line in the sand above is still at 27.45, 50, that value area high from the microcomposite. So we'll see if this is a balancing day. Generally, when you get a big move like this, we'll see a balancing day, and we'll probably have an inside day from yesterday. But we are getting a possible trend change on the daily. On the intraday, the 4-hour, we've got good slope, we've got good separation. A move back to the 9 to test it from below will take us back up into the 27.29. But as it stands right now, we've got a start of a downward trend. And again, on the bigger picture, this is normal. The smaller time frames, yeah, you're going to get trend change. But I think we're going to see chop because we're right near a very important microcomposite VPOC, which is the 27.22, and we're likely to see some chop in here. On the 30-minute, we had a strong trend down, and now we're in this consolidation here on the 30-minute, and basically just chopping around the microcomposite VPOC. So let's take a look at the bigger picture so we can get context. We went up and put an unequalized all-time high. The all-time high in the Globex is 28.87 1/4. In the RTH, this is an RTH chart only. The all-time high is 28.84. Typically, statistically, this is not going to hold. At some point in time, we're going to go up and test that. We came all the way back down to a prior balance area, price acceptance. They found buyers again, tried to get back up into the 2800s. What do? They fail at a former area where they tried to hold value. They come back down, and we basically have been shopping in this very large value area. And then we get the shift. The microcomposite VPOC was down here in the 27.69 area, and then it shifted up to the 27.2250. The smaller time frame microcomposite, it agreed, and we accepted that price, and then we gap up and we break above the value. We balanced for 2 days, push up. Okay, the sellers stepped in up here in the 92 area. We got the shift of the microcomposite VPOC down into the 78 area, or 75, I should say, and then they could not hold it. They tried to hold it in the 56 on Friday, and then today, what do? We gap down, we get back below the key line in the sand, the value area high, and we come right back down. We did not hold the 22. We pushed through lower, and we came down and tested the 2700. Tried to The bears tried to keep it below the 27.11 and a quarter month, but what do? We come right back into price acceptance again at the 22.75, and basically in the overnight session we're getting a consolidation. Our high in the Globex session is 28.50. Our low is 27.14. Actually, I think we might have made a new high, but we'll check that on the Globex. So what we are is we're back in this distribution zone, okay? And there is still some undetermined fair value between the 32.50 and the 22.50, and we're likely to chop in here. Key is for me, do we hold the 22.50? If we don't hold the 22.50, it's really going to be my over underline today, because if we don't hold it, then I'm looking for them to take out the overnight low at the 14.75 and push down and try to get back below the month open. And that's going to become more important as we move to the end of the week and the end of the month. And we're going to be watching to see, do we get into a situation where the bears take control and dip us down, okay, back towards the lower distribution down here. But we're likely at some point in time going to break below the 2,700 and at least come down and test this major CLVN in what was a former price acceptance area, okay, on the way up. So if we don't hold the 2,700, look for the main target below that to be in the 95 to 94.75 area, and then that will give us a clear indication of whether or not we're going to shift down into the lower distribution down here and start coming down and re-auctioning and determining fair value where we have undetermined fair value in this distribution. So likely a balancing day. Key levels to pay attention to: 22.50 microcomposite VPOC, the overnight high at 28.50. It's also yesterday's value area high, and if we get above that, then I'm looking for a push up into the 32.50 to test this HVN area up here, and possibly even come up and test the 45. There is a opposing zipper measured moves right now. We have this big zipper measured move that we put in the session yesterday. It has not been violated. It does not get violated until we get down to the 750. Its target is all the way up here at the 32.50, and one of the reasons why I'm watching that area, if we hold above the 22.50 and get above that 28.75 overnight high. But since then, we've had a whole bunch of opposing zippers. And right now, we have an opposing zipper down here that gives us a target down at the 09. So watch the overnight low. If we break the overnight low, look for them to push down into the month open at 11 and a quarter, and a push down towards this zipper measured move, which will not violate, okay, the larger one. Now, if we hold above the 22.50 and we get above that value area high from yesterday at 28.50, then I'd be targeting, okay, a push and this zipper being held. But what this is telling us with opposing zippers, and we have several of them that have been violated already. There was one right here. There was one right here. Is that we're in a major value area and around a very big magnet, the microcomposite VPOC at 22.50, and each side is trying to take control above or below that, and they're battling it out. You could see that every price was contested yesterday. If you were watching the dome or your volume scope or whatever you use for order flow footprint, every price was being contested. So in the overnight session, we have an overnight high of 28.50. Okay, we have an overnight low of 14.75. The VPOC has shifted again just above the microcomposite VPOC up to 23.50, and you can see that this profile is pretty balanced. But as we've been seeing a lot lately, The value area itself has got multiple distributions, and it's very toothy, very blunt type of profile. There's no real concession of price as they battle around in these value areas. So in terms of levels, again, the major microcomposite VPOC is going to cause a lot of chop, especially if we open up inside of this value area. Our overnight low is 1475. So based on the daily 20 period full session ATR average true range, which is running at 2843, our upside daily ATR is up there near that key line in the sand above the microcomposite value area high up at the 4550. Our daily upside ATR target is 43 and a quarter. And based on the overnight high, our downside daily ATR target is actually sitting right on the 2700. So we're going to be opening up inside of range, inside of value, around a microcomposite VPOC. This is going to be make for some very large rotations on the open. So I implore you, don't get into a position and get chopped up. I would wait for who's going to take control. Let the opening swing get put in, and then take the side that breaks of the opening swing. So in the context that we are, my hypo 1 and hypo 2 are going to be equally weighted. I mean, it's impossible to tell, right now as we're chopping around the major balance, which side is going to take control. So hypo 1 and hypo 2 is going to be equally weighted. But because of the fact that we have had such a big day, I'm looking for a balanced day with a downward skew as the bears try to get us back below the month open at 11 and a quarter. So I'm looking for an open auction out of in range, in value. I'm looking for wide opening swings. I'm looking for them to come up and test the overnight high, and then somewhere between the value area high, which is the overnight high, and that 3250, I'm looking for sellers to step in and rotate us down through, fight the 22 and 20 area, and then fail and push down towards and come right through value and come down and tag that naked or that zipper measured move, and then chop in this area with a possible late day probe down into the 2600s, but ultimately coming back up and closing somewhere in around the 2710, 2714 area. Peter, I will get to gold in just a minute. Let me get my hypos out of the way for the ES. On the opposite side, my hypo 2 is an open auction, in range, in value, a push down into the value area low, and then somewhere between the 2708 and 2702, I'm looking for buyers to step in, rotate us up, and take a trip through value up into the 2800, try to get a late day probe up into the 3250, and then sell off into the close and come down and basically close, okay, around the same close that we saw inside of this balance. That is hypo 2. Hypo 3 is a failure day, open auction, in range, failure to take out the overnight high or just tag it, and then sellers take control, take a trip through value down into the 2709 area, chop in this area, push down to the 27, and then fail from there and come down and test and take out this naked close and this naked VPOC at the 95.50 and 92 and a quarter, and then chop in this area and then try to close back into the 2700, but likely close somewhere in around the 98.50 area. That is hypo 3. Hypo 4 is a continuation day back up, okay, outside of the major balance value area. So an open auction, in range, take out the overnight low, find buyers at the value area low, rotate us up through value, chop between the 28.50 and 33.50, 33.75, and then push up into that 45, fight the 45, and then push up and come up and fill, okay, the gap up here and close back outside of the longer time frame value area high. There is a fifth alternative, and that would be an inside day and basically sideways chop in the 10-point range, inside of the value area, and just going sideways as a resting day after a big day down. Okay, those are my hypos for the ES. Gold, yesterday we were looking for gold to break down. Whoops, that's wrong chart. We were looking for gold to break down. They were trying to hold this level. We said if we got below the 69, that we'd likely come down into the 65, but we were targeting this 59 to 55 area. And we didn't get it yesterday, but we got it in the overnight. This is a 56.6 move. If they don't bounce and accept this 59 and push back up into the 71, then this is going to get a serious liquidation break, and we're looking for a move down into the 51 to 43 area. Again, I think we're likely to see gold chop today between the 59 and 55. But if they break the 55, you're likely to see 1250 tagged and a move down into the CHVN. And again, the next big destination below is down here. And until we are in price discovery down, we did not hold a key level at the composite VPOC. This is the most accepted price going back to October 24th, 2008. And gold is, is in a serious down move and is still looking for buyers below. And it's likely going to take a move down into the 1250 to 1243, 44 area before it finds buyers. We are getting stretched out. The average larger time frame, rotations is somewhere between 38 and 43. We're 56 right now, so the elastic could snap and we could get the bigger move down into the 50 to 44. Now, if we hold the 55 and they accept this 58, 59 area, then this could be the move back that starts to move back towards the 1295 area, and the first target is 65.6, and the balance that we tried to hold the last 2 days at the 1270 area. And if it's gonna be a slow grind back up if it is, but I'm still thinking we've got some more weakness, and I think we're going to see a liquidation break and a move down into the 1244 area to 1250 area coming into the end of the month. So that's the end of my analysis. As always, trade well, trade safe, and we will catch you on the flip side. And I'm going to go ahead and close the room down for the members and get it open for the RTH session. Everybody have a good day.